Hey, good afternoon, everyone. So, what we had today was a sort of melt up. We broke above the 5 hour one with this big bull bar, and it got us up to the 59.77 area, which it held for a little while, a little inflection there. And then it had another bull bar that got us up to 1.25%, that tail of our um, 5 hour range, this 5 hour one, the 1.25% of that 5 hour range, and it came back in. So the 5 hour range works really well as an intraday level. That's 300 minutes. So you can do like 60 minutes and 300 minutes and get some very good levels to pull back from and use for intraday trading. Um, so it is bullish. Our mechanics of that bear dip that everybody was wanting in the entire universe of FinTwit coming into Monday was dissipated quickly on the GDP print. A 4.6 GDP print is huge. And I think that woke up the market. I mean, you can't sell 4.6 GDP. It's impossible. I mean, it's fantastic. Um, we want more 4.6 GDP prints. We want higher. We want to see 5.6 and 6.6 and 7.6 GDP. It is great. It's going to, lead us out of any recession talk. People are going to find employment. There's going to be money. There's going to be money for the infrastructure. There's going to be, money attracting into the United States for growth. Um, and there will be a lot of consumer participation with, jobs and this or that. So I do think that the way that the Treasury and the Trump administration is thinking about this with the stable coins, the United States digital coin, the USDC, and the United States digital tether, which is a gold backed treasury. The USDC is a treasury backed government coin. That will attract foreign investment as well as United States investment. Remember, I guess you're not as old as I am. You know, we used to have savings bonds and people would buy. I used to buy them. I had them in my drawer. I had them all over my apartment. You would buy them, weekly at the bank when I cashed my check. I would pick up a double E bond and just stick them somewhere and you just accumulate them. And so that will be what will be occurring. They'll be buying the USDC coins that are backed by Treasury or the USDT and hanging on to them. It's going to be their little savings accounts for the lower income, working class people. So I think you're going to have a built-in market for that you haven't seen aside from the foreign investment. So it's very positive. It's going to also help the Federal Reserve lower the interest rates because the inflation just is not happening that Wall Street projected was going to happen. And we're just getting started with all of this. So the inflation may pick up a little bit, but it would be a production demand driven inflation, which is the kind you want, not the bad kind. So I think it will, lead us to getting a reduced deficit and you know start kicking in that golden age. We need a golden age. We've had so many years of couple of decades of this inflation or of the inflation and the recession. I mean, it was a recession whether they called it or not. of that, recessionary, nobody went to work, everybody was, struggling with the inflation and staying home and not spending. We need the good times back. We need the people out, in commerce, in the restaurants, in the stores, and, you know, spending money. It would be good for the economy and good for the world. So bring it. I say, bring it on. And I'd like to see the Russell, look at this, got up to its daily three today, which is fantastic. It got beyond its daily three on the 29th. Um, so we're making strides, picking, the market is trying to pick up. You know what is not picking up, interestingly, is the Dow, because Warren has all of their investors out of the Dow and into the repo market or the money market funds, which goes into repo, and they're making nothing. They're missing out on all this big rally from April, sitting on the sidelines, not participating in this, which is a huge mistake, right? So, I mean, we have a good ways to go. And before anything, 60-50, before anybody really stands in your way or says anything, they're, I don't want to get too excited, but I know non-farm payrolls is coming up Friday. So um, let's just wrap our heads around the volatility as it comes. And you see how flat we are. It's not really a good, healthy system, but we are getting a little bit of upturn now. We're getting an upturn on the 3 and the 2. The 1 is still kind of flattish, but our R-vol has been breaking out over the 3 and sitting on top of the 3 now with the point range. So the VIX is trying to break out long vol long, or, short vol, VIX going short. And the SPX is flatter than a pancake. Look at this. SPX is just not happy. Look how tiny and compressed it's been. It is flat. Flat, flat, flat. It did not even get to its daily 3-point range. So the SPX is pulling back in, and they're just waiting for the non-farm payrolls too. If we get a good payroll report, this market's going to explode. I mean, you've got good GDP and you've got people working. Oh my God, right? What do we want? An invitation? So I say, watch the volatility. It's flat right now, which is a little bit of a concern. We want it to be upsloping. So in a good long ball situation or long market, um, we want it, or is a good situation where the market went long. Oops. Well, I guess anything from April currently, but here, let's look at May through July of last year. Let's do that. So let's scroll back. Let's trip the light. Fantastic. And go back from May through July of last year. All right, so here is May right here. And there's July. So you can see that in June, you see how this starts going up. that reinforced the long vol long and got you going. And then when the volatility accelerated, um, let's see, in July, I didn't really turn around until I just kept going all the way through the month. So even with that pullback, that was good. So I guess that long vol long might have happened in here, but you don't want to necessarily have the volatility curling up. You'd like to see it, I guess, continue moving down or flat to go long. So sell high and buy, or buy low and sell high. So when the H-vol gets up to over 100 is when the market will sell off, and we're not there. There, I spit it out. So you really have to have your H-vol daily over 100 to worry about selling off. When H-vol daily is over 100, this is when you get your oversold. And we're not anywhere near that. And it takes a while for that 14 period to get up there too. That just doesn't happen overnight. So we've got a ways to go for an uptrend if we can get through this non-farm payroll. So we might be flat going. Well, we have a report tomorrow. The ISM non-manufacturing comes out tomorrow. So we've got two good indicators to get us some kick to get higher. And so just hold on to your seats. Our market forecasts have been really good lately. They've as far as being precise, good in precision, getting us some volatility metrics that has matched the market. But like I said, be careful because anything can happen with everything going on in the macro. You've got wars, you've got tariffs, and any other number of things. So just keep it tight and play the hand that's dealt with you every day, and be glad that the market's going up instead of down. That's what we want. All right, we'll talk to you guys tomorrow. I'll have a Globex report out in another hour or so. Thank you so much.